Who knew that the monkey who just needed bananas could outperform all these Harvard degrees, right? Hello ladies and gentlemen, I'm back today to tell you how I plan on getting rich in the stock market without ever investing in one singular stock. For those who don't know me, welcome back to my YouTube channel. My name is Alam and I'm just a guy who makes personal finance videos. Let's get right into the video. If you're feeling a little bit skeptical about the title of this video or a little bit hesitant, congrats, you didn't fall for my BS clickbait title, so I want to give you a props right there. My way of getting rich on the stock market without investing in the stock market is actually by using something called exchange-traded funds. An exchange-traded fund is essentially a fund that can either track something like the stock market, so the Dow Jones, for example, the New York Stock Exchange, the TSX or the S&P 500, or it can track a sector, for example, automotives, technology, or energy, or it can even track municipal or government bonds or corporate bonds. Alright, so the first advantage of investing in ETFs is that you get diversification exposure, which lowers your risk overall. Now, what do I mean by this diversification? Well, let's think of it as you're going to a Halloween party and you're told to bring candy. You have two choices here. You can either go in on all of one type of candy, for easy sake, we'll say peanut butter, or you can go on a variety pack and get something for everyone. By going in on only the peanut butter, you're risking the chance that someone has an allergy and they may not be able to eat it. But if you go for the variety pack, you're going to have the chance that everyone's going to enjoy the night. Similarly in stocks, by investing in ETFs, you get the diversification, which essentially means that if something goes wrong with one investment class or one of your stocks, the other stocks will hopefully help you out and ensure that you're not going completely broke. The second advantage to investing in ETFs is it's the preferred and the easiest way for most new investors and novice beginners to get started off in investing. Legendary investors like Warren Buffett, for example, have stated that if you're just starting off and you don't have the time to spend on investing for a full-time career, you should just simply buy an index fund or an ETF and hold it forever. This buy and hold strategy has been proven that over the long run it can outperform professional hedge funds and investment funds that spend countless hours and have tons of resources like supercomputers, expert analysts that are paid millions and hundreds of thousands of dollars to do this for a career. If you're shocked about the fact that an ETF could easily outperform an asset manager over the course of 20 to 30 years, I would highly suggest reading the book by Burton Malkiel called A Random Walk Down Wall Street. In this book, he actually quoted a study where they took a monkey who threw darts at a newspaper and picked these random stocks based out of all fluke, and eventually over the course of the long run, that monkey actually outperformed all these asset managers.
Guys, just thought you might want to know, sales aren't up, they're down. Ooh.
If you're now bought in on ETFs, you may be wondering, where's a good spot to get started off or a good spot to think of investing in which types of funds? So I've put together the list of 3 ETFs that I'm currently invested in. For my first fund, I invest in my local market, which is the Canadian market. For me, that's in the TSX, and I do that through Vanguard's fund of VCN, which is primarily composed of Canadian stocks through the TSX. Next up, I invest in the US. With this, I choose to invest in the top 500 largest companies, and that I can do with VFV. Finally, I choose to also use emerging markets, and for that, I choose to use VIU. These are all funds done through Vanguard, and I'd highly suggest looking through their fact sheets before investing in them, as well as, again, I cannot stress this enough, do not make your investment decisions based on someone on the internet. Always do your own research and look through these funds.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Well, Well, what can I do to get back
I'm sorry, sir, but this line is for bank
So you may be wondering, why do these three funds seem most right for me? What did I use to qualify them? Well, personally, by having exposure to the entire globe, I feel I'm most diversified as possible, which leaves me to minimize the amount of risk. Alright, so now that we've gone over the basics of ETFs, you're probably wondering, how do we get started on investing in these? Well, for platforms, it's pretty simple overall. You got two choices over here. Choice one is going to be your self-directed way, and it's pretty straightforward. If you're in Canada, like I am, you're going to use either something like Wealthsimple or Questrade. Those are the two platforms that I use, but there's a lot of other choices. All you're going to do then is put in your personal information, wait a few business days, maybe 3 to 5, and soon enough, you'll have access to be able to put deposits and funds into your account. And from there, all you have to do is add in those funds into your account, and then you can start trading by using the ticker you want, putting in the amount of stocks or ETFs that you want in, and then you have ownership of those ETFs. The second method to be able to invest through ETFs is by using something called robo-advising. You're going to fill out a questionnaire based on your risk tolerance, which you'll say, how much risk do you prefer? Are you a low-risk person, which means you're most likely going to have more bonds in that account? Or are you more of a high risk and have more tolerance for the ups and downs, meaning there's going to be more stocks, which means there's higher returns, but also a higher chance of loss. Once you've kind of figured out based on that assessment, the robo-advisor will automatically invest as you put in the funds periodically, and it can even reinvest dividends for you, for example. I will note, by using a robo-investor, you may be paying 0.5% of the assets under management, so whatever amount you own, it will take a certain cut of that, but just know that it is lower than the 2% that standard active managers tend to pay. Although 1.5% of a difference per year may not seem like a lot, it can actually save you tens of thousands of dollars over 30 to 40 year periods. So before you go start investing in any ETFs, I want to keep you aware of 3 potential risks that you should be aware of when investing in ETFs. The first thing that I want you to be aware of is that you should always be aware of what's inside the ETF you're investing in. So make sure you're looking online, seeing what holdings are in that portfolio, and if it's right for you and you feel you're comfortable with the risks surrounding it, go ahead and invest in it. Second thing you want to be aware of, or the second risk, is that just like any type of asset class, even with an ETF, there are chances that there will be ups and downs in the portfolio. However, if you do buy and hold over long periods, there is a greater chance that those long-term ups and downs can be mitigated, and overall, you should be able to perform alongside the market if you're holding the broad market index. Third piece of advice overall is that you should always do your own research and draw your own conclusions if the ETF or stock you're investing in is best for you. You always want to have a hypothesis when you're investing, and if things go wrong, at least you can understand what you were thinking and have the hindsight in 2020 to make you a better investor over time. Thank you guys so much for watching the video. Have a great day. And while you're at it, why don't you go ahead and watch another one of my videos. As always, thank you so much, and we'll talk to you guys later.